Today is Tuesday, November 17th, and this is a post-market review for the stock market activities today. The notable action today was that the quote-unquote mysterious entity that has been pumping the market overnight forgot to set their alarm clock, and they forgot to pump the market overnight. So what did we see today? Muted action across the indices, meaning the retail is not participating to pick up the pump to the magnitude that the mysterious entity expected them to do. So now we are in a situation where new blood is not entering the market and retail traders are not buying the pump. On the other hand, you do have market participants who are already invested also not believing that it is time to sell, and you see the market getting stuck in neutral position today. In today's episode, we have a lot of good news for you to cover. We will look into Warren Buffett's latest moves and where smart money is going. Furthermore, I do have charts for you, and I have a lot of charts. The SPY, the Qs, the VIX, TLT, TNX, Apple, Tesla, Pfizer, CVS, Costco, so stay tuned. But for now, let's cover how the market closed. And here we go. The Dow Industrial Average closing in the red, down 167.09 points, or a decline of 0.56%. The Nasdaq also in the red by 24.79 points, or a decline of 0.21%. The S&P 500, no different story here, in the red, down 17.38 points, or a decline of 0.48%. What sectors led the market today? It is energy once again. Energy, the notable outperformer, and we will give it the gold, the silver, and the bronze today because consumer cyclicals comes at number 2, but it is muted and the performance is way below what energy did today. And you see the rest of the indices closing in the red. And the notable decliners for the day, led by utilities, healthcare, and consumer defensives. Moving on to cover the futures market, and right away we see muted day for crude oil, managed to close in the green, but it is muted. And you see that energy stocks are trading way ahead where crude oil futures are trading. Lots of optimism in energy stocks, and we will see whether that is well placed or ill placed in the next few days and weeks because the crisis is not over yet. What do we see here in softs? We see more gains for Coca. Coca had a massive day yesterday, another one today, and the gains are about to close over 8% for the week. Very impressive week for Coca. Cotton muted. Our friend OJ, another big day of gains, over 1%. Coffee also closing in the green, but remember coffee had a massive day yesterday, so it is taking a little bit of a break, even though the break happened to be on the green. Lumber, big day for lumber, up over 3%. Sugar, taking a break again. Sugar been on a tear lately. Today was its day to take a break and decline about 1% or so. What's going on here with metals? Muted day again for gold. So long as the action in the US dollar is muted, gold will continue to be muted as well. Silver declining about 1% or so. So did palladium, but we see more gains here for platinum and declines of about 0.5% or so for copper. What's going on with meats? Live cattle, another day of gains. And we see the same story here with feeder cattle and muted day for lean hogs. And perhaps the results from Tyson's earnings are very important to resemble what's going on in the futures market regarding meats. What's going on with the grains? Big day for soybeans and soybean meal, but we see muted action across the board, notable gains for corn and declines for wheat. Moving on to the options market, and let's see how the tables did today. NEO coming up at number 1, and we see muted action in the options market. Apple not as hot as we've been seeing it lately, and the story is similar with Tesla, but NEO remains a very hot trade. Coming up at number 1 with over 1.1 million contracts traded today. About 63% of those were calls. Tesla at number 2 with about 1 million contracts. 61.7% of those were calls. Now, you would think that the inclusion of Tesla in the S&P 500 would excite option traders and the Robinhoodians to gamble back again in the Tesla table. That is not happening whatsoever. We saw a slight increase for Tesla. Yes, it is a notable increase from the last few days, but it is nowhere near the peaks of August and the summer, because we do have a new shiny object called NEO, and we know that the Robinhoodians have attention deficit and they're easily distracted by the next shiny object, and now they're figuring out that NEO options are a lot cheaper to trade and they make them way more profits than Tesla's. But continuing with the casino, at number 3 we see Apple with about 900,000 contracts. About 64.5% of those were calls. And here are some interesting trades for you that happened during the day. We do have Macy's. They're buying the 9.5 calls expiring on New Year's Eve, with expectation that Macy's will gain about 8% or so for the break-even price. Remember that Macy's is reporting earnings this Thursday. Here is another very important trade and very notable for Apple. This one is a big one. Buying or selling, depends on how you look at it. For every buy, there is a sell. It is a trade after all. And Apple here, they're buying the 131 calls expiring also New Year's Eve, with expectation that the name will gain about 10% or so from this time all the way to expiration date. We see a similar story here for L Brands. They're buying the 37.5 calls expiring January 15th, with expectation that the name will gain about over 6% by expiration date. And remember, L Brands also reporting earnings this week. Here's another one for General Motors, buying the 38.5 puts expiring December 4th. I happen to agree with this call. I think General Motors will take a bit of a break before resuming the rally once again. You see a name here of VFF. This is a cannabis trade. The name was up big today. This is a wild shot, so we're not going to pay attention to it. But if you are interested in it, it is a $9 calls expiring in December 18th, with expectation of further gains of about 11% or so by this time. And at the bottom of the table, we do have a bearish trade for Carvana, buying the 210 puts expiring this upcoming week, with expectations that the name will decline over 5% or so by the end of the week. Now remember, Carvana is a Ponzi scheme. However, I wouldn't bet against the name, because it has a massive percentage of its float shorted, meaning that every time the name declines, shorts will see an opportunity to cover and buy the name. You don't want to bet against a stock that moved really high and still has a massive amount of its float being shorted. Until all the shorts are squeezed and manage to cover the shorts, then it is time to hit this garbage very hard and expose it for what it is. Continuing with interesting trades, we do have an interesting trade here for Boeing. And it is the same trader here, opening the 235 calls expiring next week, and at the same time opening the 197.5 puts expiring this Friday. And there are many ways to interpret this trade, but this is how I see it. I see this trader selling the 197.5 puts expiring this week, and the trader is saying, hey, we might see declines in Boeing and we might not, but if we do and we go below 197.5, I'm willing to buy shares of Boeing, and that would be my entry price. And then I am betting on a rebound for Boeing next week, and I'm willing to close the trade at 235. And if that doesn't happen, guess what? I get to collect $229 for every contract I sold. Again, very smart structure here. The trader knows the entry point and the exit point, very defined and very smart trade if it is done this way. And we do see here a call for Tesla buying the 465 calls expiring next week, and these cost about $800 per contract. This trader is expecting Tesla to climb another 5% or so to the upside by next week. And it is also a smart trade, specifically if the trader owns shares of Tesla and he or she is selling out of the money calls. But even if it is not done as a covered call, if the trader is just buying naked calls, that is also smart, because if you go backward in time when volatility was high, this particular trade would have cost you $1,600 to enter the trade. This trader is getting a discount because the volatility is still low, relatively speaking. So if we see more stampede in buying Tesla shares, these calls could appreciate very fast. And here we have a trade for Palantir Technologies, the deep state software. And it is again the same trader, and perhaps it is constructed the same way I interpreted the Boeing trade, meaning the trader is selling the 16.5 puts expiring this week with expectations that the name could decline to that number after the massive rally today. And the trader is willing to buy shares of the name at the price of 16.5. And then they're saying next week, I am willing to sell my shares for $19. And they're selling the $19 calls expiring next week, meaning that even if Palantir, say, closes at 18.5 by next week's expiration date, it doesn't matter for this trader because they get to collect the premium anyways. Again, very smart construction here, knowing that your entry price is 16.5, your exit price is 19. It's the same story with the Boeing trade, selling the 197.5 puts expiring this week and then selling the 235 calls expiring next week. And let's say if worst case scenario Boeing and Palantir stay flat, this particular trader gets to collect the premium. Very smart. And the last trade I got for you here for Freeport-McMoRan, FCX, they're buying the 25 calls expiring December 18th, with expectation that the name will climb an additional 19% or so. I own shares of Freeport-McMoRan, and I also sold this particular trade, the 25 calls expiration date, December 18th, and if the name manages to close above 25 by expiration date, I am willing to sell my shares in Freeport-McMoRan. And now, let's move on to the headlines that shape the day. And we will start with some macroeconomic news. Here is the first one. U.S. retail sales misses expectations in October. This is a no surprise here because what pushed the high numbers of retail sales in September was the last bit of stimulus and unemployment benefits. When you take that away from the picture, the consumer is very weak and has no disposable income to spend and prop up retail sales. And that again emphasizes the importance of passing a new stimulus bill. Now moving on to some good news, good macroeconomic news, we have the US manufacturing output picking up in October. And this is no surprise, it is a response to the surge of demand on automobiles. Now remember, retail sales is a leading indicator, meaning it shows you whether consumers are spending or not. It shows you a pulse of consumer purchasing power. The manufacturing output could be both a leading and a lagging indicator, depending on which sector of the market and manufacturing you're looking at. In this case, when we look at autos, we saw auto sales surging in the summer and in September, Labor Day deals, etc. And now you're seeing the response of US auto manufacturers to produce more vehicles to meet the quote-unquote demand. The question here is whether the producers of automobiles are right or wrong in their decision to ramp up production. Because if the consumer already bought their vehicles during the summer and now they don't have any disposable income, you will end up with excess supply and you will have to lower prices significantly thus crushing your margins. And again, it emphasizes the importance of passing the next round of stimulus. But when we do read the piece here, manufacturing output increased 1% last month. The Federal Reserve said on Tuesday, data for September was revised up to show production of factories gaining about 0.1% instead of decreasing 0.3%. That is good, as previously reported. Factory production remains below its pre-pandemic level. So we are recovering from a manufacturing standpoint, but we are nowhere near the pre-pandemic levels. And it all depends on the health of the consumer from this point on. Moving on, we heard the news in the morning that Amazon is starting an online delivery service for prescription drugs, thus competing with CVS, Walgreens, Costco, and every other online pharmaceutical company. Amazon has a bargaining power and they can sell you drugs for lower prices and more convenient delivery options. Now, I'm not sure what to think about this one. On one hand, it is probably good for us consumers. We will get more competition, which means more favorable drug prices for us and more convenient delivery by Amazon instead of waiting 3 hours at the pharmacy to pick up a prescription. On the other hand, it is a further demonstration of the monopoly power that Amazon has. That Amazon out of the blue can announce an entry to any market, in this case the pharmaceutical market, and destroy the competition right away. So again, we will probably see regulators and more public policy pressure against Amazon for their monopoly practices and bargaining power. But the consumer wins on this one. And right away, you saw shares of GoodRx, which IPO'd not so long ago, plunging. And we also saw CVS being destroyed along with Walgreens and McKesson and other drug delivery names. We'll cover all of them in the heat map analysis, and we will take a look at CVS chart during the charts analysis. Moving on to Tesla, we've heard the news that Tesla was included or will be included in the S&P 500 in December. And right away, you saw shares of Tesla climbing over 14%, although they managed to close capturing only half of those gains, about 8% or so. What do we make here about Tesla's inclusion in the S&P 500? The argument here is that passive investors will now have to buy Tesla shares indirectly. And the argument was, for the last few weeks, is Tesla is running out of new money, new blood to buy the name. It is very expensive, and the new generation of investors are already all in Tesla. There is no money waiting in the sidelines to be poured in Tesla, thus creating another rally. And even after the news today, we saw muted action. The volume was low in Tesla. Retail traders were not buying it. Some did, but the majority didn't. Again, because there is another shiny object called NIO around the corner. And the question here, well, maybe passive investors will pick up the tab and buy Tesla shares, pushing it higher. However, history suggests that when a high-flying name joins the S&P 500, it is likely a sign of a top, and you actually start to see declines from this point on. And the other concern is for the S&P 500 is they are including a giant. The valuation of Tesla is over $400 billion. How would that change the weighting formula in the S&P 500? That is question number one. Question number two, what if we do have problems with Tesla further down the road, or they're not delivering anymore, or they have whatever problem, and you see the valuation and the multiple, instead of being expanded, being reduced? You will see a lot of pain in the S&P 500 and passive investors because of Tesla alone. So the situation here is very concerning. Oh, and by the way, Reverend Elon Musk today made over $15 billion. However, I think by the end of the day, he made half of that, maybe 7 or 8 billion. Not a bad day, I would say. And he now passed Mark Zuckerberg to become the third richest person on the planet. Speaking of the richest man in the planet, remember this guy, Warren Buffett, who used to be the richest man on the planet at some point, and we had information from Berkshire Hathaway latest moves, and we heard from Buffett discussing why he dumped Apple and Costco. So let's dig down and see what the big buffet did last quarter. Right away you see Apple, and they have decreased their holding in Apple by about 36 million shares. So we see Berkshire here raising about 20 billion bucks from that sale alone. They have also reduced their positions in banks significantly. We see Buffett selling Wells Fargo another 110 million shares worth about 3 billion or so, and you see JP Morgan Chase dumping 21 million shares or so, also worth about 2 billion bucks. However, Buffett maintains his position in US Bank Corp and the Bank of New York Mellon, so he's still got some exposure to the banking sector. And we see him increasing his stakes in General Motors and Kroger, two names that I happen to own, or at least I used to own General Motors until last week. So great minds think alike here, although I think I copied Warren Buffett, not the other way around. And you do see new positions here for the big buffet, specifically in the pharmaceutical industry, buying shares of AbbVie, Merck, Bristol Myers, and Pfizer. Very interesting moves here from Berkshire Hathaway. And we also see Buffett buying T-Mobile. And I told you that the earnings of T-Mobile is probably the best earnings report that I have seen during this entire year. It is the most impressive earnings. The company is growing phenomenally. And I envy Buffett here because he probably got T-Mobile at a better price than me and you would get it today. So again, the theme here, taking profits from Apple, abandoning the banking sector, at least big banks, and settling to boutique and smaller banks. And we see more exposure here for the pharmaceutical industry for Berkshire Hathaway. Moving on to some Fed news, and we've heard from a lot of Fed personalities this week. And today we heard from Atlanta, Fed President Bostic. And please remember this guy and remember this face, because this man could be the next Federal Reserve chairman, replacing Jerome Powell under the Biden administration. And Bostic is a little more aware about the struggles of average Americans when you compare him to the multi-millionaire to begin with, Jerome Powell. But make no mistake that Bostic is also very hot on the printer. Perhaps he's even more dovish and can't wait to push the printer on even more overload status. And today, Atlanta Fed President Raphael Bostic did an interview with CNBC, and he said that I do believe the recovery could be more robust than it is playing out to be. And he says, and this is very important, the job loss that was originally identified as temporary is now flipping over into permanence. We've been telling you this on this channel since the issuance of the jobs report. The permanent job losses jumped a stunning 50% from September to October, and now the Fed is paying attention. So what is the remedy here, Mr. President Raphael Bostic? And here it is. Bostic says Fed's tools still have quote-unquote juice and will be used if the economy slows down. Ay. Remember, in this channel, we've been describing the Fed's quantitative easing action as the juicing operation, because this is what it is. It is juicing the market up. They know that stocks should not be trading anywhere near where they're trading right now, but it is a juicing operation, pushing stocks higher, making the rich richer, making public corporations richer, and hoping that some of that money will trickle down to the real economy. And we've been years and years and years in this strategy, and that did not happen yet. But it is very interesting that a sitting Fed president would describe the operation as juice. And by the way, it is now a competition between Jerome and Bostic, who is the more dovish and has the hotter hand on the printer. You hear Bostic saying that he would offer more juice to the market, and here we have Jerome Powell doing an interview and saying, responding to a question, how do you manage the size of the balance sheet for the Federal Reserve. And Jerome responded that it is too early to even think about normalizing the size of the balance sheet. Meaning that let's do the action now and flood the market with another tsunami of liquidity, and then years from now, we think about the destruction we've done, and we think about the balance sheet and the dangerous exposure when the central bank of the world becomes a poker player gambling in the casino. And I know the Fed says, oh, if there are defaults here and there, we'll just write that balance off. You think that comes without consequences? Think again. And now, moving on to some news about market sentiment. We talked about insiders selling to the highest magnitude that we have seen in the last 8 years on last night's video. And we also covered the move from Bill Ackman placing a big bet shorting the market. And here, while you see dumb money and the Robinhood idiots and retail traders hopping into the rally, pouring more money, not taking profits, we do see that the smart money confidence is at the lowest level ever. The rich and corporate insiders are dumping stocks, taking profits off the table. And when we look back at the whole 2020 Robinhood idiots phenomenon, and it is ironic that it's called Robinhood because it is a vehicle to transfer wealth from the poor and the middle class to the rich. The Robinhood idiots buy, and they think that stocks are going to go to the moon, and insiders let them do their game. You want to make us richer? Fine, we'll take it. But at some point, corporate insiders and the elite start dumping stocks, taking profits off the table, raising liquid cash, and they dump the market on the heads of the dummies who bought the lottery ticket. Rinse, lather, repeat. And then they buy the market again at the bottom, and now they don't have retail traders' participation again because retail traders are bag holders, or they panicked and they sold at the lows. The unfortunate truth about the retail traders' mentality, and this is what I'm trying to change by doing this channel. You gotta be a little smarter than what you're doing right now. Learn how to take profits off the table. Play just like the big boys do. Big boys and girls, I should say. You buy low, you sell high. You don't buy low and you wait till it gets low again and then you sell. You've wasted months, even years of your life watching quote-unquote the gains and the hope of the lottery ticket, but you did not book your gains. Please be better than this. And now we do see that the ratio of insider sales to purchases hit 58-1 last week. That is a stunning ratio because anything over 40-1 is ridiculous and is considered insiders panicking and selling because they're seeing a crash around the corner. Now we're seeing 58-1. What more do you need to take your profits off the table? Take them while you still can. Moreover, we do see that the devil, SoftBank CEO Masayoshi Son, is hoarding cash, preparing for the quote-unquote worst case scenario. We talked about Bill Ackman yesterday. We're talking about the devil today, also raising cash, waiting in the sidelines because he knows what's going to happen next. Remember that the devil was a big participant in the pump and dump during August and September. And here is the last bit of information I got for you. Last week, we have seen the largest outflow out of the short QQQ's index. And this is a pulse for the dumb retail investors' direction. Remember, a few weeks ago, when the market was declining, they stampeded and they bought the short QQQs. And what happened next? Tech stocks and the market as a whole had an impulsive rally post-elections. Now what are they doing? They're dumping the short QQQs and they're migrating to the TQQQs once again, signaling that we are at the top here for technology names, and we will likely reverse the course lower, meaning that these retail traders are chasing the market after the fact. When the market creates a massive rally, they dump the short QQQs and they become very bullish buying the TQQQs instead. What do you know? Next week, the market reverses lower. They lose their money, and what are they going to do? They're going to dump the TQQQs and chase the market again, buying the short QQQs, and what do you know? The market will reverse higher. This is called shaking out the weak hands. Frustrating retail traders, making him very confused, chasing the market, being too late, losing money over and over, week after week. And again, the message, be smarter than this. And now, moving on to cover the heat map analysis. Right away, you see it is muted to mixed picture across the board. Starting with the technology sector, we do see the big boxes of Microsoft and Apple experiencing some declines, but the notable declines here is for TSM Taiwan. We've seen the pump in Taiwan. Yesterday it was up over 8%. It caught the eyes of, again, the retail trader, the amateur trader. They chase the name, they buy the options, and now the earlier entrance of the trade dump on their head. Remember what Warren Buffett said, what the wise guy does in the beginning, the fool does at the end. Always remember this quote. But we also see a rebound here in the ServiceNow, Adobe, Square, Team, CRM. Some of the hot names managed to rebound today in the software sector. What's going on with communication? Muted action across the board. We see Google and Facebook declining. Facebook declining the most. We know the Zuckerberg was testifying in Congress today. Zoom managed to rebound just a little bit, up about 0.5% or so. And we see the same story with Spotify and Snapchat, rebounding just slightly, very, very slightly. Muted day for the big gainer of yesterday, Disney. What's going on with consumer cyclicals? Amazon gaining a whopping 0.15% after they announced their drug prescription services. Even though the trail of destruction they left on other names in the healthcare sector is very, very notable. We also see declines for Home Depot. Home Depot reported earnings today, and I gotta tell you, I've been watching Home Depot reports for years and years now, and it is almost always that Home Depot declines after reporting earnings. Always does that. We see the gains in Tesla of 8% or so. We talked about the inclusion in the S&P 500. We see a muted day for restaurants and apparel, but we do see Lulu gaining a little bit. Remember, we have very important apparel retail earnings this week. Casinos, cruises, hotels, all muted today. Alibaba, another day, another decline of 0.5% or so. We see Wayfair along with Zoom, Spotify, Snapchat, etc., DocuSign, the names that have been declining severely the last few days, catching a rebound, a very slim one today. What's going on in consumer defensives? Walmart reported earnings today, also down 2% or so. Target reporting earnings tomorrow, also down today on the heels of Walmart's earnings. Costco remains the name of the big box stores that managed to close in the green, although it was much higher earlier in the day, trading above 5% or so. But again, after the earnings from Walmart and the news that Warren Buffett dumped Costco, we see Costco declining from the highs. We do see declines in beer, liquor, two names that have been very hot the last few days. So did Tyson and Cisco, also closing in the red. Similar story here for REITs. You see that shopping mall REITs, commercial REITs had big day on Monday. Today, they're giving up a little bit of those gains. What about utilities? Bad day for utilities here. Declines in Dominion Energy, American Water down big today, Duke Energy, NextEra Energy, all declining significantly today. What's going on with basic materials? Another green day for copper and Freeport-McMoRan, but more pain for gold miners. And you see the biggest gainer in the sector today was Vale, the Brazilian miner. What's going on in the energy sector? The winner of the day. Big gains across the board, but there is an exception. Chevron down 2% or so. Chevron not getting any love today, even though the energy sector was the outperformer overall. What's going on with industrials? Another day of big gains for Boeing, FedEx, but muted across the rest of industrials. We see notable declines here for Emerson and Honeywell. Remember, I sold my entire Emerson holding last week. What's going on with healthcare? The laggard of the day. Right away, we see another painful day for Pfizer, down over 3%. We'll take a look at the chart of Pfizer today. Johnson & Johnson also giving up 1% or so. AstraZeneca over 2% to the downside, but there are gainers. Eli Lilly rebounding just a little bit, and Merck closing in the green by over 1.5%. Painful story for health insurance plans and pharmacies. United Health is down. CVS down over 8.5%. We talked about this name yesterday that it gained about 40% since October 30th. And it was an insane move, and Amazon today put an end to the massive rally in CVS. Mckesson, also big decline today. And remember, I sold the name. I thought that the name ran really hot. And today, Amazon putting an end for the rally in Mckesson as well. What's going on in the financial sector? Muted day here. We see gains for Charles Schwab, Goldman Sachs, Morgan Stanley, but big banks, muted action. Credit services also muted, with notable declines for American Express. Let's paint some color here and visit the rotation trade. Overall, you could argue that it was a momentum day / stay-at-home stocks kind of day today. Even though there is an exception of Tesla, we know the story here. But right away, you see that we replaced Papa John's with FedEx, and FedEx was up 1.8% today. Rebound day for DocuSign, Zoom, Peloton, just a little bit. There wasn't any significant volume today. Retail traders are still, the majority of them at least, holding back. They're not sure what to make of this massive rally we've seen post-elections. What's going on across the other side of the aisle? We talked about Emerson down big today, Planet Fitness, Budweiser, American Express, all closing in the red. And I apologize for the error in Chevron. It shows in the green here, but we covered it during the heat map analysis. It was down big today. Sometimes you miss some of these numbers while you're editing them. But we do have gainers too, such as Six Flags, Ulta Beauty, Live Nation managed to close slightly in the green. Moving on to cover some charts. Even though it was a muted day today, we have some important takes. Here's a 15-minute chart for the SPY. Right away, we saw a gap lower, but we caught support from the level of 359. It was a battle in the morning, but the SPY managed to recapture 359, closing above it, and all in all, we've seen flat activities from yesterday's opening to today's closing. The notable thing here is the volume was much lower than yesterday. And what do we see here from a daily perspective? We're not seeing anything notable here. It is not a reversal day. If anything, it is a slight down day to recock the gun and try to hit 364.40, the all-times highs. So we'll continue to watch. And for me, I'm staying on the sidelines, watching the action with my popcorn on one hand and my shorting cash on the other. Moving on to the Qs, 15 minutes perspective. Again, it is a flat day. Nothing happened today, but we did test and retest the level of support of 292, and we managed to close above it. I see this as an illustration of the importance of the level of 292. But you see that at the end of the day, we started to slide closer to the support line after we caught support from it midday and rallied higher. The rally hit a ceiling and reversed back to the support line, showing a little bit of weakness here and perhaps paving the way to break the support of 292. We'll stay open-minded here. Moving on to the daily chart. Unlike the SPY, the bear flag formation in the Qs is still on the table until and unless you see another big green vertical candle to the upside. And that could happen as soon as tomorrow. But again, by the end of the day, the Qs showed a little bit of weakness here. We didn't see any notable activities for the dollar index or gold today, so we are skipping those two charts and moving on to the TLT instead. What do we see here in the TLT? Gapping higher. This is what the bears been waiting for. They want to see smart money moving out of stocks into bonds, signaling the first signs of the reversal. So this was another score point for the bears today. It is not definitive yet. We need to see more build up and more appetite to buy bonds tomorrow and throughout the week. And what happens when we see a gap higher for the TLT, we see a decline in the TNX. The 10 years Treasury yield declined today, breaking the 90 basis points and now trading at 87 basis points. We gave the TNX the benefit of the doubt yesterday, saying that perhaps it is catching a break, cocking the gun, and trying to reach the very important psychological level of 1%. We remain open-minded that this could be the case, and we could see yields surging higher once again to capture 1%. But the reality here is we're forming a lower low, and we're seeing weakness here. We're not seeing a decline in the TLT, so the likelihood is that we are going to continue to reverse lower, meaning that perhaps this could be a good time to place a shorting bet against the KRE regional banks, the biggest beneficiary of high yields. But again, wait till tomorrow. If you see another day of declines, then I will not hesitate to place a short on the KRE. But for now, I'm waiting and giving the TNX the benefit of the doubt that it will recock the gun and challenge 1%. And what's going on with the VIX here? When you look at the chart of the VIX, the post-election drop, it looks like one of those Roadrunner cartoons when you drop off a cliff and the character tries to tiptoe on its feet to break. This is what it looks like. It looks like the VIX dropped off a cliff and it's trying to push its feet to the ground to break and stop at these levels, meaning that the VIX is not ready to collapse yet. It is actually trying to break and then gather more energy to blast higher again. This is my interpretation of the chart, of course. And we see the VIX closing in the green today. And again, you see it reaching my level in the RSI that I consider to be a bottom, and it is starting to curl just slightly higher, both in the RSI and the MACD, signaling that we could see the VIX trying to pull another rally from this point on. And here is a 15 minutes chart for Apple. What do we see today? We looped around the very pivotal level of $120. And at the end of the day, Apple managed to close below 120. And we do see somewhat of a double top formation from a 15 minutes perspective, which could lead Apple to decline all the way to the support line of 117. So I'll keep an eye on that, and I'm watching for Apple to experience that hard rejection from 120. Moving on to Tesla. 5 minutes perspective this time around. Why is it 5 minutes, not 15? Because I'm trying to illustrate to you the importance of the line and the number I gave you yesterday, the 452. Now, some people messaged me yesterday and they said, you said that 452 would be a resistance, etc., etc. But Tesla after hours is trading well above 460. So you don't know what you're doing, you're too bearish on Tesla, etc., etc. What do you know today? Yes, Tesla opened higher, catching support from where? 452. Then breaking that support, trying to reclaim it, getting rejected from 452, which is resistance now, as illustrated for you on the chart from the second arrow. What happened after the rejection from the 452 resistance? A flush down, a decline, and closing all the way down at the level of 441.5. Tesla again could gather more energy and give it another shot, but 452 will remain very strong resistance here. And by the way, when you look at the chart from a daily perspective, again, Tesla, after the very big news, much anticipated news of the inclusion of the S&P 500, that wasn't even enough for the chart to reclaim the prior trend line. And if you shorted Tesla right away at the beginning of the day, you made a killing today. It does not look good for me right here. I remain neutral in the name because at the end of the day, the decline of Tesla will only come when the hardcore fans, aka the culties of Tesla, decide to sell. For now, they're holding and holding and holding because they believe that the name will trade at 500, even 2,000. Some go at 15,000. All of these stratospheric predictions which will not happen. Stock prices are tied to valuations. It is not a video game. But again, if this continues and Tesla remains trading flat, slightly to the downside, it could frustrate some of the holders. And some big whale starts to dump, causing pain in the name. And then you see the snowballing effect all the way to the smallest fish in the pond, which will dump at the bottom. Moving on to Pfizer. Here is a 15 minutes chart. And remember the important level that I gave you of 36.40 that I am willing to buy shares of Pfizer at. So today when the name gapped lower in the morning, I was watching the chart of Pfizer very closely. And what I saw is a struggle to recapture and reclaim the trend line or the support line, resistance line, whatever you want to call it. It is a very important level in the chart of 36.40. You can call it 36.50, 36.5. It doesn't matter. It is within that range. But what I saw is repeated rejection for the name, struggling, getting rejected over and over again from the important level of 36.40. And what do you know, after multiple rejections, the name flushed down, closing below the important resistance line. So I ended up not buying the name and holding on my decision instead. When we look at a daily chart, you do see the rejection very clearly here, gapping lower, trying to climb higher, but getting rejected from the resistance line and closing lower. Pfizer has to prove itself to me before I put any cash into it. It needs to reclaim 36.40 and march higher to close the gap from today. However, I do think the fact that Moderna's vaccine is more effective than Pfizer, that we will see more pain for Pfizer here. Moving on to Costco. Remember when Costco flushed down last Monday, not for this week, but last week's Monday, I told you it is an opportunity to buy. It is a knee-jerk reaction, and I gave you the line of 363.5 as the entry point and 388.25 as the exit point. And you see that worked phenomenally to the penny. And I did close my call options in Costco today. Where do I see Costco from this point on? I think it will trade in range between 363.5 and 388.25. But the trade is done here. The ship has already sailed. And here is the last chart of the day, CVS. You do see the impulsive rally since the beginning of the month. And yesterday it was getting very ridiculous here. And you see that hanging man formation at the top. And what do you know? Today, after that big climb for CVS, the chart decided to bungee jump, and it was down over 8% today. And I see further declines because the law of gravity will dictate the movement of the chart. You cannot rocket higher, creating all these gaps with no severe consequences. You hit an air pocket and you will flush down. CVS chart is a very good indicator to what's going to happen to the overall market. Remember, we have an impulsive move post-election in the SPY and the Qs, creating so many gaps, and this chart is telling you what's going to happen to the SPY and the Qs next. We gonna hit an air pocket and flush down just like CVS did today. Stone cold short, and I bought put options on CVS today. And now let's move on to conclude this video. Another day, another muted reaction from the market. Low volume, but the importance here is that the mysterious entity forgot to pump the market overnight. So is this all there is? Are we just going to hover very close to the 30K level in the Dow and never reach it? They're going to pull the rug before we go to the psychological level, which everybody's anticipating. This could be the scenario we're looking at here. For now, I remain open-minded. I do see Dow 30K as a very important psychological level to reach. I do see the 1% return in the 10 years Treasury yields as a very important psychological level here. So I'm giving the bulls the benefit of the doubt, waiting for them to reach Dow 30K and 1% in the TNX. But I'm also watching my three conditions for the reversal. We saw Apple closing below 120 today. It was not a harsh rejection yet, but it is notable. We're seeing the TLT gapping higher, and we are waiting and anticipating for the VIX to start blasting higher and recapturing the pivotal point of 24.8. Before I log off, let me thank everybody who watches this channel on a daily basis. All the subscribers, if you're not subscribing, please do so. Everybody who presses the like button and comments, I read all your comments and I look forward to answering all of your questions. Thank you for watching. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.